Happy FreightWaves Wednesday edition, tip of the cyclical freight cycle, hump day. Hope it's all happening for you. I'm Chad Prevost.
And I'm Emily Zink. I love how you say cyclical cycle. I can't even say it quickly. So it's Wednesday. You love Wednesday? Good day.
I love it. It comes natural. It's all happening right here on at FreightWaves and in the freight economy.
Yeah, Wednesday's always a great day, but not right now in Chattanooga. It's muggy, it's dreary, it's not great out.
A little smoggy.
Yeah, not loving it, but unfortunately we don't have as many weather concerns as people in the other parts of the country. Rain just continues to hammer some parts of the country. Chief Meteorologist Nick Austin is looking at this problem of flooding is still a big issue.
It seems to be everywhere, at least in the same parts of the country as it has been for months, including the Gulf Coast. Now, this has been an ongoing problem, but it's going to get worse in some parts of the Gulf Coast today as far as flooding, possibly in the Houston area, particularly because of some heavy thunderstorms, possibly some severe storms. So right around the Port of Houston, also a lot of the oil refineries along the Gulf Coast, these orange circles on the critical event maps indicate moderate risks for flooding at a lot of these assets along the Gulf Coast. So we're going to be watching those areas today. Going to the next map and moving a little bit northward, right along the Mississippi River, the ports of Little Rock and St. Louis, still no barges are allowed through. This includes a lot of grain barges holding a lot of other types of products as well. So there's really there's nothing moving on barges in most parts of the Mississippi, at least the middle and lower Mississippi valleys. And also the Port of Little Rock rail service, some rail service has also been suspended. So there's a lot of material, a lot of cargo just not moving up and down the Mississippi River on these barges. And that's really bad. That's important. We need that stuff moving. About 1 billion tons of cargo on barges is moved along the Mississippi, up and down the Mississippi River on average every year in the United States. And a lot of that ends up down at the Gulf Coast, in the Port of New Orleans, Baton Rouge as well, for export, and a lot of it's not getting there. And it could be days and days before a lot of those barges can be untied and start doing some more business. So that's going to cause a lot of problems. It's causing problems right now in the short term, but in the long term it's going to cause some problems as well. Hopefully that'll get better soon, but probably not this week. Last map, just an overview of the lower 48 states. Where is most of the severe weather going to be today? It's going to be right here from the Midwest all the way over into the Carolinas. So if you have to carry any loads today from, say, St. Louis over to Indianapolis, Cincinnati, down into Nashville, Eastern Tennessee, and over into Southern Virginia and the Carolinas, one way or the other direction, watch out for severe storms there. They'll be scattered across this region here that's shaded in the yellow. So there will be a lot of heavy downpours in spots, possibly flash flooding with some roadblocks that you might have to kind of steer around and reroute. There'll be some areas of large hail as well, strong gusty winds, and maybe some isolated tornadoes. Now, just outside of this region here to the south and to the west and north, there could be some isolated severe storms. So the best bet's going to be right here in this region for the rest of today, as well as into at least part of this evening. That's where the bad weather is today. That's what's happening as far as weather across the country. Thanks for joining us, and be safe out there.
And now we are here for our finance segment with Seth Holm. He has been doing his homework, and we have some interesting bad news, good news related to the economy. Seth, welcome.
Thanks, Chad.
It's great to have you on.
It's great to be on. So 2 weeks ago, FreightWaves called for a freight slowdown, actually a freight recession. So I actually do have some bad news. Here, taking a look at this chart, this is a chart of the U.S. 10-year Treasury yield. What this is actually saying is the bond market is confirming that slowdown in the overall economy. So as you can see, last week, President Trump announced surprise tariffs on Mexico in addition to China. And what that did is that sent the U.S. 10-year yield plunging last week. It plunged by 40 basis points last week.
That is one powerful tweet.
That is a huge move in the bond market. That's that's almost a 3-year low in the bond market. And what that does is these bond yields trade inversely with the outlook for growth and inflation. And so what this is telling you is that growth and inflation are rapidly deteriorating.
Okay, because it is possible to have a freight recession, but not necessarily have an economic recession as we saw in 2016. But now you're saying that the data is showing us that there may actually be a broader economic slowdown.
If not a recession, certainly a slowdown. So it's not only the bond market, but the stock market is confirming a pretty big slowdown as well.
Okay.
Yesterday we had a good day in the stock market, but it's off 7% off its highs just in the last month since all these tariff announcements. And then you've had credit spreads as well. If you look at, a lot of people like to look at high yield credit spreads, and what that indicates is deteriorating credit conditions in the economy. Those blew out last week as well. And so what happens when you get a slowdown, right? The Fed starts to cut rates, which is exactly what this second chart here from the New York Times and the CME. So the CME does Fed funds futures, right? And so when the economy slows, that increases the chances that the Fed is going to cut rates. And that's exactly what this is showing. On this chart, if you look back here in February, the market was predicting basically a 0% chance that the Fed was going to cut rates at the July meeting. This is for the July meeting. It creeped up a little bit to about 20% in May, but just in the last week, this has exploded higher. Now you're sitting at about a 70% chance of a rate cut in July. And this is a big change in the market. So entering this year, a lot of people expected 4 to 5 rate increases. And so now you're looking at rate cuts. And not only July, but the market is pricing in a 90% chance of another rate cut in September and an 80% chance in December. So 2 to 3, you're looking at 2 to 3 rate cuts rather than rate hikes.
What do you think is contributing to this? You mentioned the recent last week Trump tweet about the Mexican tariffs. Is it a tariff thing, a global? What are some of the factors, if such as you can ascertain, contributing to this surprise?
Yeah, I think it's a couple things. I mean, the tariffs are not helping. So now with the announcement of the Mexico tariffs, you now have 80% of imports between China and Mexico together account for 80% of the imports are now going to be tariffed. That is not good. And on top of that, the economy was already slowing anyways. A lot of that is last year, it's similar to what we saw in the freight markets, right? Last year we had a big tax cut fueled year where there was a lot of growth and a lot of hiring and all that kind of stuff. And you're going up against comparing against that now. So it's already naturally hard to grow on top of really strong levels from last year, and the tariffs are just making it worse.
Wow, okay. So is this good news that we're going to have rates? I mean, it's kind of like good news within the bad news.
Yeah,
right?
So I would say it's bad news in the sense that the market thinks that growth is slowing. It's usually good news for the stock market when you get a rate cut. And so the hope is that once you cut rates, that'll sort of ease credit conditions, it'll improve consumer sentiment and investing and investments for companies and all that, and you can get the economy headed back in that good direction.
Thanks for tuning in today for our broadcast. Some mixed news. We're bringing it to you right now. Today, it's a finance, economic look, and there's some crazy things happening with the freight economy and the broader economy right now, Emily.
Yeah, it was crazy to say how one tweet kind of changes everything from the president, and it kind of changes the economy in that way. Don't you wish our tweets were that powerful here at FreightWaves? But we do have a lot of good tweets, so follow us on social media, definitely our Facebook page. You're watching on YouTube, Instagram. We have it all, so definitely share the love.
Share the love, and if you can, don't worry, be happy.